welcome. You are watching Business Today television. I am Sakshi Batra. Well, this is a special edition. We've actually seen the RBI Governor Shaktikanta Das deliver the decisions of the RBI's Monetary Policy Committee. And this is a show where we will be decoding all the key announcements that have been made. Remember, there are 5 key highlights. The repo rate has remained unchanged at 6.5% for the 7th straight time. The RBI has also maintained its stance on withdrawal of accommodation. There is a 5:1 majority decision on keeping the repo rate or the key policy rate unchanged at this point in time. That's the third key takeaway. The fourth one is that the fiscal year 2025 real GDP growth is seen at 7%. And the fifth key highlight is on the inflation front, where FY25 CPI inflation is kept at 4.5%. Many other very important details have been shared. Before we get on to our guests and the discussion of decoding what does the decision really mean for you out there as retail investors or common investors at large, let's quickly listen into what RBI Governor Shaktikanta Das had to say in his speech.
The MPC also decided, after a detailed assessment of the evolving macroeconomic and financial developments and the outlook, the Reserve Bank MPC decided by a majority of 5-1 to keep the policy repo rate unchanged at 6.5%. Consequently, the standing deposit facility, that is the SDF, rate remains at 6.25%, and the marginal standing facility, that is the MSF rate, remains at MSF rate and the bank rate, they remain at 6.75%. The MPC also decided by a majority of 5 out of 6 members to remain focused on withdrawal of accommodation to ensure that inflation progressively aligns to the target while supporting growth.
So that was the governor, and now let's welcome our 2 very special guests who are joining us on the show to decode the policy findings for us. So Rajani Sinha joins in. She's the chief economist at CARE Ratings. Very warm good morning to you, ma'am, and thank you so much for taking the time out. Also joining us is Mr. Vivek Kumar. He's the economist at QuantEco. Welcome to you, sir, as well. I'll begin with you, Rajani. Thank you so much for sparing all that time. Your first take on the policy, is it absolutely on predictable lines, or is there something that has come at as a surprise to you in this policy decision?
Sakshi, I would say the policy was very much on expected lines. Market was expecting that RBI will, maintain status quo. I think the key takeaway would be, which the RBI governor has been highlighting in the last few meetings, the unwavering commitment to getting inflation to 4% target. I would say that's the main takeaway. And in the speech, RBI governor highlighted that their main concern, core inflation is coming down, services sector is seeing disinflation. The main concern is around any kind of supply side risk to inflation. He spoke about increased climate risk in India as well as globally, which could have an impact on food prices. And also, the increased geopolitical risks, because of which there are concerns around commodity prices too. So I would say the main takeaway is, this whole focus of RBI on inflation, which is going to continue. And given the fact that growth is healthy, it kind of gives room to RBI to wait and watch.
Okay. Vivek, your first comments. What did you make of the key decisions that have been announced? Was it something that you were expecting that has not come through in the policy statement?
Hi, Sakshi. Good morning. Good to be back on the show. So I would agree with Rajni that it's completely a long expected line. So for me, this policy stood out as a reiteration of, let's say, the macroeconomic comfort and the resilience that India has been showing, number one. And number two is, again, reiteration of few concerns, especially on the inflation front, which RBI has been repeatedly highlighting for the last few policies. They've been saying that we've kind of won the war, or, won the battle, but the war is still out there to be won. They use the analogy of elephant returning to the forest,
yes.
And they said that the elephant they would want the elephant to remain in the forest for on a durable basis. So what essentially is saying that we've covered a major part of the distance as far as the war on inflation is concerned. and it's the last mile which needs to be covered. So there is no room for complacency at this time because growth is giving us that comfort. You can still persist with the anti-inflation stance for the time being. And globally also, as far as the key central banks are concerned, especially Federal Reserve, etc., they are not showing any signs of discomfort as far as the slowdown is concerned. In fact, the recent policies made by some of the Fed governors in the last 1 week probably suggests that there is increased amount of caution on inflation front. So there is credibility at stake from a global monetary policy perspective as well. And the central banks, which have done the hard work, especially in the last 1.5 years, they would want to ensure that the hard work actually starts to pay them. So from this
Absolutely.
perspective, status quo is what is maintained, and status quo will probably be maintained in the very short term.
Okay, Rajni, on inflation, since both of you have highlighted that as the core focus still remaining on the RBI's radar, what the RBI governor did say is that inflation is moving closer to the targets, but the last mile is still looking challenging as of now. Core inflation, like Rajni, you mentioned, the governor said that it's been on a decline for the past 9 months, but the RBI must be actively disinflationary is what he's mentioned as well. He also said that, of course, what Vivek highlighted, that CPI is being seen as the elephant in the room right now, which predicted at 4.5% in FY25, adding that persistent high food inflation impeding CPI is now coming down as well. Fuel has been lower, but it's the supply shocks for sure that need to be under watch list. How are you looking at the crude oil prices moving northwards? Is that going to be a key challenge moving forward in the next policy? Is that going to be something that the RBI governor will keenly look at?
Overall, look at RBI is expecting a 4.5% for FY25. As for
Rajni, I think there is some kind of an audio disruption that we are finding in. Could you try say something again? Because we lost your audio in between.
fact, if we look at CPI projection, RBI's projection for next year, it is at a benign 4.5%. If we see core inflation has been going down, so has been the case with services inflation. The main concern is around food inflation, which still persists at high levels of around 7.5% or so. And specifically, if you look at some of the items of daily consumption, like vegetable prices, pulses prices, they remain high. But at the same time, I must mention that cereal prices, given the supply side intervention that the government has been doing, we have seen moderation in cereal price inflation. So I think what RBI is doing is being very, very cautious of any kind of risk that can emerge going forward. Because if we assume a normal monsoon, we are expecting food inflation to also moderate going forward. So, but I think RBI is just being cautious because as far as climate risks are concerned, it's very difficult to say what's going to happen going forward. And as we have seen in the past, these climate risks are just growing, not just in India, but globally, which has been putting pressure on food prices. And we have seen that in the last 2 years. And like I mentioned before, the other big concern is on commodity prices, other commodities like crude oil prices. While overall, our expectation is that global demand is going to remain weak in 2024 also. Hence, there will not be demand side pressure on commodity prices, including crude oil prices. But it's difficult to predict what's going to happen on supply side, given the increased geopolitical conflicts that we've been seeing around us. So in the given backdrop, I think RBI is being cautious, even though they have given a projection of 4.5% inflation for next year.
Right. Vivek, do you think at least the indications made by the RBI as far as the early indication of a normal monsoon is concerned, the rural demand and the private consumption trends, at least are those going to give some kind of comfort as far as both growth and, a lid on the upside on the inflation is concerned?
So I think from a balanced perspective, what is comforting is the projected trajectory, of course, which is at 4.5% on inflation. That kind of remained unchanged between the last policy review in February and the current policy review in April. What has intermittently changed is that we now see few amber flags. So I would still not call them red flags because they are not in the red zone yet. So oil prices have climbed up by almost $8 to $9 in a span of 2 weeks. And the IMD has come out with an advisory against the possibility of some heat waves. So basically, what it means is that the entire April to June quarter could see a higher than normal temperature. And higher than normal temperature, while might not impact your Rabi output, because most of your Rabi output is already sown, it's just the harvesting which is left, which is something which the governor also mentioned. Where it can potentially have an impact is on the horticulture. And horticulture is where you see fruits and vegetables coming in and creating a lot of volatility in your CPI basket. We saw that playing out in FY24. And if the heat waves turn out to be severe, and if they turn out to be prolonged, then you could potentially see that as a risk. So RBI is kind of contemplating that risk and also banking on the possibility that the La Nina conditions which are expected to set in by June should augur well for a normal monsoon. So if there is an upside risk to food prices in the very short term, they can potentially get offset by a normal monsoon outcome. So net, you could see the upside and the downside risk kind of balancing each other out. So as of now, we are in a stable situation. So you could argue that risks are balanced. You have both upside as well as downside risks to CPI inflation as well as to food.
Fair point. Let's also understand on the growth. I mean, Rajani, was there an expectation that at least the growth forecast would be perhaps tinkered on the upside? And is that something that, something that is missing from the RBI governor this time around? Because the projections are absolutely same at 7% at FY25. How would you really look at the growth, picture shaping up now?
So RBI's growth projection at 7% for FY25 is in line with our projection. I think the market started expecting an upward revision to the growth projection because of the very good recent high frequency economic indicators that we have been seeing. But I would say that 7% is a very good number. And I think we should be able to achieve it. And I feel that, yes, there are chances that probably the number may turn out to be a little higher than 7%. But right now, we are also sticking to the 7% projection. As far as growth is concerned, the main thing to watch out for is what's going to happen on consumption. We've already seen in FY24 that there is a wide divergence that has come up in terms of the growth that we have seen in investment and consumption. So consumption has just grown in as per FY24 estimate, consumption has grown by 3% as against much higher number of 7% or so that we were seeing pre-COVID. So I would say that's the main concern. And again, even in consumption, what we will be looking at is as to when and how does the consumption growth become more broad-based. Because rural consumption has been weak in this year. But here also, if I look at some of the, recent data that has been coming from, which gives an indication of what's happening to rural demand, even in terms of rural demand, we are seeing an improvement. If I look at some of the indicators like two-wheeler sales, that has shown an improvement in the last few months. If I look at, FMCG volume growth from the rural area, which is, this data I'm quoting what, we have seen in a Nielsen report, that is also showing that in the second half of the year, FMCG volume growth has shown an uptick in the second half of the year. So I think on the rural front also, we are seeing signs of improvement. A lot will depend on monsoon. If we have a normal monsoon going forward this year, we could see an improvement in rural demand, which should help in a more broad-based consumption recovery. And just to mention, another critical thing will be what happens on private investment. That's also important that it picks up in a meaningful way in FY25. And I would say here also, we are indeed seeing some signs of improvement happening in some of the sectors like steel, cement, auto, renewables. So we are seeing signs of pickup in private investment too.
Okay, so both private consumption and private investment going to be key factors to watch out for. Vivek, your own thoughts on the growth picture that you see shaping up. What is your own projection? Is it in line with the RBI governor?
Broadly in line, Sakshi, we are at 6.8% as far as GDP is concerned. While optically, if you compare FY24 and FY25, it would appear that there is some sort of a moderation because FY24, the numbers which have been pegged by the NSO is at 7.6%. But a large part of this moderation would be statistical. By statistical, I mean the value added component will probably see a little bit of a decline because there is an expectation that global commodity prices are going to be higher this year, and there will be a little bit of squeeze on margins. So your value added component will come down. And also to just take you back last year, as in financial year 23-24, there was a wedge between GVA and GDP. Slightly technical because it was created by the net indirect taxes, which was extremely wide. And this is something which is not normal. So we would expect some sort of a normalcy to start getting back, and that statistical wedge should come off. So accounting for these statistical anomalies, the GDP growth picture actually gives you a roughly flattish view. So we are expecting a 6.8, broadly in line with what the RBI is saying as at 7%.
Okay. Rajni, anything else that you would want to point out as far as the liquidity, conditions are concerned and how the RBI is planning to move forward with it?
So RBI has been indicating in the past also, including this meeting, that they would look at maintaining liquidity at at an appropriate level so that it doesn't come in the way of good credit demand, which we are expecting going forward. And at the same time, it is not inflationary. So the critical thing to watch out for is what happens with the kind of strong FII inflows that we are expecting in FY25. FY24, as RBI governor highlighted, was very good in terms of FII inflows. We got more than $40 billion of FII inflows as against outflows that we had seen in the previous 2 years. And it is the very strong FII inflows is expected to continue in FY25 with the inclusion of Indian government bond in the global indices. So in that sense, it will be very critical for RBI to manage that liquidity appropriately. And it will also be very critical for us to be a little more vigilant on this front because, FII inflows being good is fine, but at the same time, we need to be cautious because FII inflows are volatile in nature. So it also kind of highlights the risk of outflows happening going forward if things turn adverse.
Okay, so we've discussed largely growth, inflation and the liquidity aspect. Vivek, first to you as far as what the interest rate path really looks like from here on. Are we going to be seeing the governor really preferring or the MPC preferring to stay higher for longer now? Because there was a mention where that globally the interest rate cut would be perhaps delayed than what was earlier anticipated. We heard it from the comments by Fed also earlier, and now the governor also hinting onto that. What does it mean? What is your own expectation of the rate reversal now happening, rate cycle reversal now happening?
Well, we would probably use the phrase stable for longer because we've been staying pat at 6.5 since February of 23. And
Yeah.
it's been 14 months that we've not touched that rate. The expectation is that we are likely to remain in that scenario in the near term. So we would expect the first change in the repo rate to most likely happen in the month of August. Again, this is subject to the assumption that monsoons play out pretty normally, both in terms of the quantum as well as in terms of spread, because that will be crucial in offsetting the above normal temperatures that one is likely to see in the first quarter of this financial year. So if that were to happen, and if the Federal Reserve does deliver one rate cut before August, then the room to start delivering the first rate cut in August will be much widely opened. We also need to see here that RBI is forecasting 3.8% inflation for Q2 of the current financial year. That's actually dipping a tad below the 4% mark. Although they have been saying that we want to be there on a sustainable basis, what exactly they mean by sustainable, we don't really know. So what probably they have in mind is that they need to be as close as possible to the 4% inflation mark. And on a medium term basis, by August, you will also have two subsequent quarters of inflation forecast from the RBI. If they are in the region of 4.5%, I think that will exude much more confidence in going ahead and cutting rates. To also point it out that 1 out of 6 MPC members for the second time has voted for a rate
Yes.
cut.
Yes.
So we need essentially one or two more MPC members to start moving towards the dovish side. Hopefully, do not materialize. I mean, the upside risks do not materialize. Commodity prices are by and large range bound. Then it would not be difficult to assume such a scenario to play out.
Okay, fair point. Rajni, what about you? August or later?
So we are also expecting that rate cut is a possibility in the second half of fiscal year. There are two things that it will be contingent on. One is that inflation continues to moderate, specifically food inflation. So here, the assumption of normal monsoon will be critical. The other important thing is what happens in US. So increasingly there is this talk about what if US does not cut in the current year. Will RBI still go ahead and cut the policy rate here? I feel most probably I feel that US economy, US Fed will go for a rate cut in the second half of the year. But at the same time, I feel that even if US Fed delays the rate cut and continues with, US interest rates remaining higher for longer, I think there's still room for RBI to go ahead and go for a shallow interest rate cut towards the second half of the fiscal year, as long as food inflation moderates and inflation, CPI inflation comes down on a durable basis, which the RBI governor has been indicating. If that happens, I think RBI would still go ahead and cut rates, because I think, RBI should look at and will start looking at a real rate of interest of around 1 to 1.5%, which I feel gives a scope of a shallow rate cut of around 50 basis point in the current fiscal year towards the second half of the year.
Okay, point taken. Vivek, some of the other measures also that were announced just towards the fag end that also interest a large part of the viewers, because it largely is related to digital payments and reforms being brought about to augment or facilitate some of them. I'll read out some measures. So RBI is going to be looking at launching a mobile app to facilitate retail participation in government securities market as well. UPI access for prepaid instruments through third-party apps. At present, only UPI payment can be made only using web or mobile app as well. So that's going to be perhaps changing. RBI is going to be notifying a scheme for trading on sovereign green bonds at the International Financial Services Center. That's another thing that has been spoken of as well. And very importantly, what the RBI did say as an indication for banks and NBFCs and other financial institutions, the RBI governor did mention that these institutions need to give highest priority to the governance and adherence to regulatory guidelines as well, and how these institutions should be mindful of these aspects. He did say that the RBI will continue to constructively engage in a dialogue with all these stakeholders. Of course, we've seen a lot of developments take place in the last 2 months before the, of course, between the previous policy and now. How would you really look at some of these measures, and what does it mean for the larger part of our audiences?
I think on the regulatory part, this is again probably it was a medium for the RBI governor to come out in the public and reiterate whatever has happened, especially in the last 2 months pertaining to a particular bank. And they want to reiterate and make it absolutely clear that the regulatory guidelines, especially if you are a deposit-taking institution, and it has to be adhered to completely. So there is no leeway, there is no dilution in terms of interpretation and as far as the execution is concerned. That's number one. Number two, on the payments front, it is interesting because, Sakshi, I always believe that RBI as an institution is probably one of the best as far as the payments ecosystem is concerned. It's not just RBI, probably the other institutions also in the vicinity, in the payments ecosystem vicinity, that do contribute towards that. And we as a country have now started exporting the global payments in the form of UPI. the rest of the world. So we are already the best, and we are getting better.
Absolutely. Rajni, please continue.
So what RBI is doing in terms of, let's say, introducing an app would probably excite slightly more informed market participants like me and you with respect to retail participation. And it's a good thing because it's something which is only going to help widen the government bond market.
Okay, point taken right there. Rajni, last word to you. What other key takeaway should one be mindful of with the kind of statement that has come about? Of course, there will be a detailed press conference and more details will come out from that. But for the average viewer out there, what's the message that you'd like to share? Rajni, there is some kind of an audio issue again. Could you please check that?
So
no,
the
I
main
think
thing
there is some disturbance. Yeah. Now we could hear you. Please go ahead.
I think the main takeaway, like I mentioned earlier, is that RBI has reiterated or highlighted that growth is on a firm footing. But at the same time, we need to remain cautious because there are, concerns lurking in the form of, geopolitical rifts, supply side bottlenecks that can emerge going forward. Inflation has been moderating, but again, with food inflation remaining high, RBI is concerned that it shouldn't get passed on to higher inflationary expectations because that's very critical. Because here, when you are talking about food inflation, that's something which has very high impact on household inflationary expectations. Hence, RBI will be cautious on that front. But again, if we see a normal monsoon this year, we could see food inflation also further moderating. So I think that's the key takeaway. Healthy growth, inflation moderating, but we need to remain cautious. From my side, I feel that yes, there could be a rate cut going forward. But if you see from the RBI statements, they have given no indication of that because they want to be just, cautious and ensure that market does not take anything into account which doesn't actually materialize going forward. So in that sense, they have not even changed the stance and they have continued with the stance of withdrawal of accommodation. But having said that, I feel there is a scope of interest rate cut towards the end of the fiscal year.
Okay, well, on that note, thank you so much, Rajni, and thank you so much, Vivek, for being with us on this very special edition, decoding and simplifying for all our viewers what the RBI policy decisions have been. Truly, appreciate all your presence and, you sparing your time for our viewers on this very important day. Thank you so much. Appreciate your time. Thank you. And with that, ladies and gentlemen, we have come to the end of this conversation. The stock markets have actually turned flat. They've sprung up from the low point of the day, 22,500 on the Nifty. The Nifty Bank is into the green as well. So some kind of a positive indication. The markets have taken in positively what the RBI governor's statements have been. If you look at the PSU banks, the realty space, the Nifty Bank and the private banks, PSU banks, all of them, and even the financial services, they're inching higher in trade, giving us an indication that the markets have accepted with both hands what the RBI governor has mentioned in terms of the interest rates, the projections on growth and inflation, and of course the commentary around what is to be expected going forward from here. With that, we wrap up this very special conversation, but do stay glued on to Business Today TV as we will continue to get you all the live data from RBI's press conference from the headquarters in Mumbai. And of course, a further detailed decoding of the Monetary Policy Committee's decisions this time around. Stay with us. Two stock ideas that you will be going with today.
Yes, so we are recommending two stock, one from the IT space. Now Persistent, we are liking very good at current market price. Reason being, the Persistent is giving a breakout from the falling trend line, or we can also say there is a falling channel breakout on Persistent. We are seeing some short covering based on